Welcome to the podcast series Talking Success, connecting the global FinTech community. Today we turn our attention to South Africa, where we're joined by two brilliant minds from Franc. Franc is an investment app that really is trying to change the way that South Africans and people are investing and allowing them to get access to the best cash and equity funds, no minimums, and the smartest and easiest way to invest. We are joined today by Thomas Brennan, who is the CEO and co-founder of Franc, along with Sebastian Patel, who is the COO and another co-founder of Franc. Thank you so much for joining us today, gentlemen. How has the start to Q1 and now we're into Q2? How has that been for you both and for Franc?
It's been great. We started off the year. January was our best month ever. And on a personal note, I'm about to become a dad. So I think from my perspective, all things are looking up.
Yeah, I mean, Jan was our best month for like new customers in a specific month. I think a lot of people had, New Year's resolutions and stuff, new year kind of thing. So I started off the year with a bang. And then Feb, not as good in terms of new customers, but it was our best month in terms of like inflows of money. So like the most sort of deposits in terms of like quantum and like number of deposits.
No, that's brilliant. It's always good to have a solid start. Long may it continue. And Thomas, I know Franc was initially sort of your brainchild. You then brought Seb on board. Take us back a bit. How did you guys meet? What sparked the idea for you to start Franc, and also, of course, to join forces with Seb?
So Seb and I actually go way back. We studied at UCT together and lived together in Smuts Hall, one of the residences there. And over the years, we've, remained good friends along with a bunch of other guys, which has been great. My career kind of had a sojourn into academia. I did my doctorate at Oxford and did some research. I was very passionate about kind of biomedical engineering and specifically helping people make better decisions, obviously with the aid of technology. I returned to South Africa after being in the States at MIT for a bit in 2015 and started working at Discovery Health in their R&D lab, surrounded by actuaries. And I think while I was there, two big things happened. For the first time, I was actually earning a proper salary. So I had to deal with a very personal experience of just choosing what to do with my money and how to invest. And then the second was also sort of a sort of malaise. People unfortunately don't care about their health until it's too late very often.
Yeah.
And a business model, I've always had a sort of a desire to solve problems and, leaning towards starting new companies. But the business model in sort of preventative medicine is also a very tricky one. Not a lot of people are willing to pay for it.
Yeah.
So it was while I was at Discovery actually that I just realized, wow, there's just, investing from that, personal experience hand, it was like so confusing, like a terrible experience, terrible. And having been abroad for like 10 years and being used to being able to, access good investments very easily, through my phone, and that's something that I couldn't do here. So that's really the sort of the spark that really, caused me to move over, I suppose, from a health space into an investing space. The passion is still very much the same. I think a lot of people don't make good decisions when it comes to money. I definitely would say that my family, should be included in that. And again, having the access, the knowledge when it comes to building technology, I just thought this is something we should really look to solve. And then, obviously having kept in touch with Seb over all of those years, we're now 22 years friends. And obviously Seb's journey, which I think is really important to hear, is very different to mine, having studied actuarial science. So that's when I realized wow, who knows a lot more than me when it comes to finance, but also who's very different to me in terms of their skills, and so that was, I was very much, and it was fortuitous timing, but I'll let Seb tell the story about why that timing was so fortuitous.
Cool. Yeah, thanks, Tom. Yeah, so as Tom said, I did actuarial science at varsity, but never really went into traditional actuarial fields. So after university, I joined Nedbank in the M&A team. So I was there for about 7 years, advising clients about capital raisings, listings, acquisitions, et cetera, et cetera. Then I joined one of my clients, which was an investment holding company. So I've always been in financial services and sort of in the latter part of the career in investments directly. I then left Brimstone, which is the second business that I was involved in late 2018, and then Tom sort of mentioned to me at the beginning of 2019 what he was doing, and it made a lot of sense to me because having always been in financial services, I always had people like friends and family asking me for advice, like where they should be putting their money. These are generally professional people, smart people. They just, were intimidated by the options that were out there. They didn't want to, engage a financial advisor. All the problems that we were really trying to solve as Franc, they ran into. So having that personal experience of helping people sort of one-on-one, when Tom said, this is what I'm doing, it resonated quite strongly with me because I knew that, from personal experience, it was a problem that existed, for normal people, and that they just couldn't really find an easy way to start investing, which is, investing is really a necessity. Otherwise, you're not going to have any extra income or any sort of any amount to retire on. The stats in South Africa are quite dismal. I think like 6% of people can retire comfortably, and a lot of people just think that their retirement fund or pension or provident fund will be enough, but it's not. So we try and just help people be better with their money.
Awesome. And looking at Franc, what's been the mission? How is sort of Franc tackling the pain points of investing? And would you say that it's an industry disruptor?
Yeah, so I think in terms of mission, we really just want to make investing simple and accessible for people. So these were some of the issues that people have been running into and are still running into when they want to start investing. So the two main problems that we identified and that we are trying to solve are, the one is like high minimum investment amounts. So many of the platforms that are out there have got high minimums that you need to. For example, you need 20,000 Rand or 50,000 Rand or whatever it is, in order to open an account and access the investment products that they offer. And in a country like SA, this excludes much of our population, so they just can't access those products. So Franc offers no minimum investing, so you can start with whatever you want. So that's how we solve that problem. The other one is that, again, a lot of the platforms, because they're selling products and creating products, they often, have got lots of choice, and these products can be quite complex for someone who doesn't really have any investing knowledge or isn't really financially savvy to try and choose what's best for them. So firstly, it's a lot of choice, and secondly, you can't understand what these products are, or what the differences are, what's suitable for what risk profile or time horizon. So that's why at the moment we only offer two investment funds on the product. So one is the Allan Gray Money Market Fund, which is best for short-term investing. So if you've got a time horizon of less than 3 years, then the app will push you into that product. If you've got a longer time horizon, then we'll try and figure out your risk profile. So we'll ask you a few questions: income, expenses, qualification, savings amount, etc., along with your time horizon, and then we'll say, okay, based on your risk profile, you should be investing X in the Allan Gray Fund and Y in the Satrix 40, which is our longer term investment product. So this is why we are a robo advisor as well. So that's the advice that we can offer you through the app, so that you can make a good decision. So investing, there's lots of different and complicated products out there. What we're really trying to do is just get people to start. And we think that, the combination of these two products is really good enough for like 80-90% of the people out there. It's only once you've got a lot more cash, then you need to start diversifying out into other asset classes like, property or offshore ETFs or or whatever it is, crypto, etc., etc. But the biggest problem is just to try and get people to start.
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could... I don't know, save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
And in terms of you guys kind of, being a little bit of an industry disruptor in terms of the way traditional, investment, firms have operated, I mean, like you say, you're making it more accessible. And I would imagine it's not, if anything, it's just opening up to a wider audience that can now afford to invest, right?
Yeah. I think it's important to know that a lot of investing is sort of, relies on information asymmetry, and you have financial advisors who help people bridge that gap. It was, I suppose, very much my experience coming in as an outsider, from an engineering background, realizing that it doesn't have to be that complicated. And actually, there are a bunch of people, including Warren Buffett, who's argued that for the vast majority of people, so like 85% of the population, a simple combination of low cost cash and equity, kind of appropriately balanced, for your target ambitions and your goals, is really more than enough. And so that was really sort of a penny drop moment. And in that sense, I suppose it's disruptive because it's trying to broaden access through simplicity. And obviously by removing some of the barriers that Seb just mentioned, the minimums and the access difficulties and the paper process, etc. So, a lot of people think about innovation and disruption being like the advancement of technology, and it's quite difficult to acknowledge that actually we're trying to disrupt, but through simplicity. And that's really where we want our sort of secret sauce lies, is in making the journey accessible to anybody, regardless of where they're coming from in terms of their, financial literacy and education.
Yeah, the other thing that we are slightly different to other investment platforms, not all of them, but many of them, is that many of them are product creators and then they sell their product, right? So banks are selling their own product. Fund managers often are selling their own product. We are not product creators or product owners. We just want to connect people to pre-existing low-cost quality products, but like Tom said, focus on the journey and the simplicity and the accessibility. Whereas a lot of the other investment platforms or fund managers, because they've got so much on their plate, they effectively don't really focus enough on the customer journey and the simplicity. Given that we have got less to worry about in terms of like not having to create products and plugging into pre-existing products, we can really focus on that USP, which is the simplicity.
And obviously you both kind of came from big businesses into the sort of smaller, agile startup space. What have been some of the key advantages as well as some of the disadvantages for both of you, particularly obviously in the sort of investment space now?
Yeah, let me start off with that. I think part of my professional experience was also working at Google as a product manager, which I really enjoyed. The way in which Google approaches product development has really set the gold standard across the world. It's obviously tech first. You hiring good engineers, you making sure that the problems are solved, you're ensuring that there's ownership within the teams. So, my large company experience, which is really my only large company experience working at Discovery, which is, arguably a very innovative company, is still struggling, I think, with the challenges of trying to be a tech-first organization. There's a lot of culture. We don't really have big tech companies in South Africa. And so you've got this legacy of engineers and, computer scientists being kind of perceived to be the IT guys who are just getting these impossible hospital passes, tasks thrown over the wall with impossible deadlines, and, their jobs at risk if they don't complete on time. And then that's a really difficult and dangerous way to try and build good quality experiences and good quality technology that's scalable and adaptable and versatile, etc. So in one sense, it's been great to be able to kind of almost create a small company, but in that vision of trying to have it be sort of tech first. And obviously now there are so many tools and models and frameworks, agile software development, and that we can learn from. And we were lucky enough to get into the Google kind of launchpad startup accelerator, which was a great way to kind of like just have a litmus test for our processes. And largely we came back, kind of with a very positive feedback, which is great, but it's a constant process of optimization and improvement. So in that sense, I'd say it's been a huge positive. Awesome. But Seb, I'm sure, being close to the operations, also knows that there are a lot of detractors. Seb, I don't know if you want to comment.
Yeah, I mean, for me, like moving from like bigger businesses to a startup, I mean, in itself wasn't that much of a challenge. I think at Nedbank, even though Nedbank is a big business, like you're still in a smaller division, and you work in smaller teams. And Brimstone is also, I mean, it's a listed company, but it's you work in a small team focusing on transactions and that kind of stuff. So, I don't think it was a huge challenge moving from those businesses to a startup. I think that the challenge is mainly learning lots of new things. Having like previously been in investments where you funding businesses that then need to perform. Now, effectively, it's flipped. You are the business that needs to perform, and you need to learn different skills and understand things like marketing, which you never had to touch, previously, and which is arguably one of the main things a startup needs to focus on is sales and customer acquisition. So those things were very foreign to me, but some things that you just need to get right in order to become successful. I mean, we are probably 5% into that journey now, because there's still lots and lots that we need to do, but I think we've done quite well in the few years that we've been going. But so it wasn't necessarily the big company versus small company. It was just the new skills and new things that I had to like get comfortable with, and also like the tech side of things. Again, tech was something that I never had to worry about. Just like switch on your computer,
open your phone,
make sure you know how to deal with Excel and email and that kind of stuff. Like all these other tools that we use now, never had to really understand. For 3 or 4 years ago, I didn't know what an API was.
We're still learning.
It's core to how we work. Yeah.
And, talking about the marketing side, and I know you also mentioned driving financial literacy. I mean, how are Franc sort of driving this, within the market, and really just trying to, solve the investment penetration issue, which is obviously so low still? Yeah.
So, I mean, financial education and financial literacy, we know is a challenge in SA and across the continent. So although we're selling an investment product, sort of like one of the things, in terms of our mission and vision is really to help people become a lot better with their money so that they can, grow their wealth and break the debt cycle, and sort of, not be dependent on anyone else. So we do put a lot of focus in our financial education content, and that we do that, through a few different channels. We have a blog that we write fresh content every week, so it's released once a week, goes out to our customers, also gets posted onto our website, and that can be like educational content, it can be current affairs. So the recent one we did was just like explaining the difference between capital appreciation and sort of investment income. We do other educational pieces like explaining what shares are, what ETFs are, how money market funds work, how retirement, what the retirement products are out there and how they work, like tax-free savings accounts, etc., etc. So that's like the educational piece. Then like current affairs, sometimes like after a budget meeting, we'll explain, what the finance minister was on about.
Yeah.
Last year when there was that whole like GameStop short squeeze event, through those traders on Reddit and stuff. We explained like exactly what is going on. So it's like a variety of interesting content helping people like budget and how to like cut costs and take advantage of Black Friday specials, et cetera, et cetera. And then we also have like a more structured learning, content on our websites through our academy. And there it's sort of like, investing 101, saving 101, where you can learn, how credit works, how interest works, how to budget. And so that's like almost like lessons, so you can go through from one to the last one and hopefully upskill yourself. And then the last channels is like through all our social media. So, through Twitter, Facebook, Instagram, some through LinkedIn, TikTok as well, but that's more sort of fun stuff. Where we just try to, post tidbits that people can read, understand, and hopefully, the ultimate result is that they can, be a bit better with their money.
And looking sort of casting our attention to some of the trends that are happening at the moment in the fintech space. I mean, what are you guys kind of keeping your eyes on? What do you feel will sort of shape the investment landscape over the next few years? And what is kind of getting you excited?
Yeah, there's so much happening at the moment in fintech, both kind of locally, regionally across Africa and internationally. And I think what's amazing about it is obviously there's a broad spectrum of what's happening, and a lot of it has to do is obviously the state or the maturity of the underlying kind of ecosystem. So, regionally, you still see, there's a lot of friction in payments. So there's still a lot of guys are trying to figure that out. South Africa, I think, is obviously, more developed and advanced when it comes to kind of financial services and institutions compared to regionally and further up the continent. So, you see InsurTech taking place, like ourselves, and Easy Equities really pioneering kind of wealth tech. Obviously, as a technologist, I really think that blockchain and the associated technologies are really going to have a huge impact. It's just unclear at the moment, largely because kind of the regulators haven't really been able to wrap their head around it. But obviously, when it comes to remittance payments, lowering access for payments as well. So I think there's a lot happening in the space, and definitely, from our perspective, we're keeping our eye on that. We are, a regulated entity, so we don't necessarily want to fall foul of the regulator by kind of, moving too quickly when it comes into, adopting kind of crypto. But it's something that we have sort of, bounced around the idea of having a sort of access to crypto ETF as a different asset class. That's something that you could just balance your traditional investments with. And obviously, again, it would be appropriate to what you want to achieve. If you're going to be saving for the end of the year, like, you shouldn't be investing in crypto, because there's a very good chance you could, lose a lot of your money. Whereas if you are like in for the long term and building wealth for retirement, then sure, having like 5% in like a diverse, crypto ETF is not a bad idea, I think generally I'm very excited to see technology reduce some of the friction costs, some of the access costs. Payments has always been a pain in South Africa. And we're excited to have partnered with Stitch, a young fintech in Cape Town that's really trying to, force the banks to be a little bit nicer when it comes to having some sort of API, payment infrastructure. We don't have open banking here, which is really a very sad situation. But, the banks, I think, are being forced to kind of adopt technology and enable kind of a broad scale access. And I think hopefully, more to come. I really would like to see that, more to come.
Let's talk a bit more about Franc itself. What does this year look like? Are you diversifying some of your products? What can users look out for this year?
Yeah, so Tom mentioned, the crypto angle possibly. That's something that sort of we have to keep in mind. But in terms of, other products, our main USP is really, the simplicity, the ease of use. So any other products that we add, we need to like balance that out, right? So we don't want to like go against what we always try to fight. That's like complexity, right? So we don't want Franc to start offering 20 different products and then the customer is confused and like, it's pointless, right? Yeah. So we have to balance that out. That being said, we've had demand, and I think it makes a lot of sense to offer like an offshore ETF. So like an S&P 500, so you got access to the S&P index of companies. That's we'll look at that later in the year. Again, products like retirement annuities. So all our products at the moment are discretionary investment products. Having like maybe a simple RA to offer our customers is again something that we could look at. Yeah. But yeah, it's again, goes to the point that I made about really trying to balance the simplicity out, but still offering customers what they want. And in terms of like other products, so at the moment, our primary distribution mechanism is the app. So customers download the app, they invest, and they become a customer of ours. But we've also had lots of interest from other platforms that want to offer their customers a savings product. So we've just started, with our sort of proof of concept with our first partner, a company called BenX, where they are using the Franc product to offer to their customers. They've got a unique sort of use case. We've got other partners as well that also want to sort of plug into our savings product. So that's what we're calling like our savings as a service API. And it'll obviously help us get access to a lot more customers through these various platforms. So we're quite excited to have like recently launched that, and hopefully we can grow that business quite strongly during this year. Just and then other things on the app that we'll try and introduce are not potentially new funds, but other functionality for customers to start investing in multiple different goals with different sort of risk profiles. So at the moment you can only invest into one goal. So like if it's your emergency fund or retirement or whatever it is. So hopefully soon we'll have the ability for you to invest in different goals with again different risk profiles. So your emergency fund would all be in the cash fund. Your retirement pot would be heavily weighted towards equities, maybe a house deposit to somewhere in the middle, So yeah, quite excited about that. And then also later this year, potentially also have the ability for customers to invest together towards a specific goal. Like maybe they want to, save money towards a friend's wedding gift or a holiday where everyone's going. Normally there's one person collecting the money. The money's not really doing anything in their bank account. So at least here, you can provide visibility, earn some interest. You can see who's paid, who hasn't paid. So there's lots of sort of social dynamics that can, make that quite a cool concept. Awesome. One thing, sorry, just on your previous question that I forgot to mention about financial education and investment penetration. So yeah, investment penetration, outside of retirement products in SA is between 5 and 10%. And if you look at countries like Singapore and US, that's closer to 50-60%. So we've got a long way to go to bridge that gap. And I think the main thing why the education is so important is because you can tell people, listen, investing is important, you should be doing it. But if they don't understand why, then it's pointless. So that's why the education piece is so important, to say, listen, guys, you've been keeping your money in a bank account or under your mattress or in a tin can or whatever you've been doing. And your money is just like going backwards because of inflation, or sometimes bank savings accounts, the interest rate is very low and they could be charging you monthly fees. So you think you're doing a good thing, but actually you're losing money over time. Do something better by putting it into your Franc account. At least if it's in the money market account, it'll keep up with inflation. At least if you've got a longer term horizon, invest in equities, get exposure to the stock market, where history has shown that over the last 100 years or whatever, you'd have returned between 12 and 15% on average a year. And in SA, where we are the most unequal country when it comes to wealth inequality and income inequality. But the rich are getting richer, the poor are getting poorer, and one of the big reasons that contributes to that is the fact that the rich know how to invest and they're getting great returns on their invested capital, where the poor, obviously a lot of them don't have extra capital to invest. They're just sort of living month to month. But those that do are just like putting their surplus money in the wrong products. So it's really to educate people to say what you've been doing before is not optimal. This is what you should be doing and why you should be doing it.
Well, thanks so much, Thomas. Thanks so much, Seb, for your time today. It was a pleasure hearing the journey of Franc. We're excited to watch you guys over the coming sort of months and years. And once again, congratulations, Thomas, on starting your family. That's also very exciting. If our listeners want to get hold of you guys, what would be the best way for them to reach out to you?
Yeah, I think email is probably easiest. They can send an email to us at info@franc.app. So info@franc.app.
Brilliant. Thank you so much.
Thanks, Catherine.
Thanks, Catherine.
Thank you for listening to this week's episode, Talking Success, connecting the global FinTech community. Please follow us on LinkedIn under Talent in the Cloud, or if you're interested in exec talent, expanding your FinTech team, or you yourself are looking for an exciting change in your career, please check out our website, talentinthecloud.io.